quarter of the way into the year and tech stocks have led the ASX to a record high, overwhelming the negative effect the big miners are having on the market. House prices hit a record high in March, and Australia's big banks are still lifting interest rates on credit cards. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Tuesday, the 2nd of April, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up today with Martin Merrick, who is the head of Volvo Group Australia.
It's a fascinating chat because it's all about electric vehicles, but electric trucks rather than cars. Volvo is spending a lot of money developing electric trucks, particularly for the Australian market. So we talked to him about that. Of course, we go into electric vehicles and all that sort of stuff too. But it's just fascinating to see how Martin views the next few years ahead for Volvo and the market itself. It's well worth a listen, Michael.
Yeah, especially when you think that one of the big kind of concerns about electric vehicles is range and the infrastructure that we need. And here we are talking about trucks that are kind of designed to kind of go long distance. And so how they kind of figure all of that out with the electric element of it, Martin was really, really interesting on all of that. So it is well worth a listen after the show. That's coming up a bit later on. The main story this morning, though, Sean, with the first quarter of 2024 over, tech stocks have led the S&P ASX 200 higher, jumping with the Information Technology Index up nearly 25% so far this year.
Reflecting Wall Street, the local tech companies have easily been the outperformers in what has been a very strong start to the year. Leader WiseTech Global is up 23% in 2024. Xero's jumped 18%. Data center group NextDC has risen 29%. And circuit board designer Altium is up a massive 40%. The real estate companies have also done well on the back of expectations of lower interest rates. Now, property is a heavily indebted sector, so lower rates is good news. Among the real estate investment trusts, industrial property giant Goodman is the leader. Its share price is up 35% this year. Westfield Shopping Mall owners Scentre Group is up 13%, while Stockland is 9% higher. The other two sectors that have outperformed strongly are the consumer discretionary companies and the banks. Of the consumer discretionary companies, Wesfarmers is the biggest. It's up 19% this year, while JB Hi-Fi has jumped 18%. Harvey Norman's up 23%. Of the banks, Westpac and ANZ are up 13%, NAB's 12% higher. They've all done pretty well. The laggards this year, though, well, that's the material sector with the big miners leading the way down. In 2024, BHP is off 12%, Fortescue Metals 13%, Rio Tinto's down 11%. Now, James Hardie is also in this group, but it's up 9%. Most of the other sectors have been pretty flat so far. The industrials, healthcare, energy, utilities, consumer staples, telcos, they haven't done much. But we have this barbell effect going on in the market, or at least we have had for the last 3 months.
So, Sean, the market closed on the last trading day at a record high of 7,897 points. So that means that the S&P ASX 200 is up about 4% this year. Overall, kind of what's the reason for the rise? Is it all about interest rate expectations, as we've kind of talked about in the past?
Well, the trajectory of interest rates, Michael, is the dominant factor for most sectors, but not all. In fact, the two outliers, technology stocks and miners, are over and underperforming mostly for other reasons. In the case of the tech stocks, it's the AI boom and the very strong run of tech companies like Nvidia on Wall Street. Now, NextDC arguably should benefit from the AI revolution, and that's one of the companies that has done best. Altium's done better, but it had a takeover bid for that one. For the miners, it's more about the fate of China and commodity prices, and that's generally been bad news all year. Certainly in the case of the property sector, the banks and consumer discretionary stocks, it is interest rates that is the dominant factor.
All right. Now, obviously, the local market was closed yesterday for the Easter Monday public holiday. Much happening on international markets?
Yeah, plenty, actually. Gold prices hit a new high over the past 24 hours, trading just shy of $22.60 an ounce after the Fed's preferred gauge of underlying inflation, something called the Core Personal Consumption Expenditure Index, basically what people spend money on, it cooled in February. That helped gold higher. Now, gold's up about 14% since the middle of February, helped by prospects of lower interest rates later in the year. Elevated tension in the Middle East is helping the bullion as well. Ukraine, add to that story. Also, there's been strong buying of gold from central banks, particularly China. Another commodity, though, that's kind of going the other way is iron ore. It sunk to its lowest level in 10 months yesterday, falling below $100 a tonne after a rebound in shipments from Australia in recent months. So there's sort of increased supply at the same time as demand from China is slightly problematic. Iron ore prices are down about 30% this year. Oil prices are trading around a 5-month high, with Brent fetching more than $87 a barrel. OPEC Plus is holding a joint ministerial meeting this week, and investors are watching for any changes to projected output levels. Expect oil to rise or fall on the back of that meeting. And quickly in currency markets, Bitcoin is buying just over $70,000 a unit, and the Aussie dollar is buying just over 65 US cents, Michael.
Got a little bone to pick with the Fed, I suppose. So they're just kind of picking a fairly big target here.
I hope they're listening. Yeah.
Oh, they will be. That gauge of underlying inflation that you referred to, the Core Personal Consumption Expenditures Index, what is it about economists just wanting to overcomplicate things? I mean, surely there's a simpler way of describing it, just like it's just kind of core spending. Like it's just it feels like that is using 5 words to describe something that could have been done in 1 or 2. Are you with me?
Now, look, I'm totally with you. Now, in their defence, the economists talk about the core PCE index. Now, that means that none of us know what they're talking about.
That's made it so much worse.
That's right. To your point, Core Personal Consumption Expenditures Index. It actually totally describes what it is. So it's what consumers are spending on themselves for the stuff that they need, not the luxuries. Hence the core personal consumption expenditure. Oh, look, I'm trying to rationalise why economists use jargon, and that's a losing argument. Michael, I agree with you 100%. Damn those economists.
Yeah, I know. I mean, well said, Sean. And I hope the Fed is listening right now. And maybe that could be their goal for this year. I know they've got a lot of work to do with interest rates and everything. But
but just how about de-jargonise?
De-jargonise the Fed.
Yeah.
DTF.
DTF? Oh,
de-jargonise the Fed.
I was thinking of DJTF.
Yeah, maybe that's safer. DTF is really not appropriate.
No.
Goodness me. All right. We'll be back in a moment with the rest of the day's business news. Sean, house prices hit a record in March, with prices across the country now 7% higher than 12 months ago.
All capital cities except Hobart saw price rises last month, with the strongest performances in Perth, Canberra and Brisbane. Over the past year, Perth has led the way, with prices up 19%, according to the PropTrack Home Price Index. During the March quarter, Perth prices grew as fast as they've done at any time since 2010. Both Adelaide and Brisbane are up around 13% over the past 12 months. Among the other capital cities, Sydney's up 8%. Melbourne 2%, while Hobart has actually fallen 2%. Darwin prices over that 12 months were flat.
Now, Treasury Wine Estates will lift the prices of its top-tier Penfolds products, including Grange, as export demand rises on the back of Beijing lifting restrictions on wine for Australia.
Rush out and get your Grange, Michael. Rush out and get it.
I'll buy an eighth of a bottle, yeah.
So Treasury is expected to start shipping wine to China today, having been effectively banned since late 2020. According to the Financial Review, Australian wine sellers received orders from Chinese buyers just hours after Beijing lifted tariffs on Australian wine last Friday. Treasury Wines wasn't commenting on the price rises yesterday, but they will be on Penfolds Bin 389, 407, St. Henri and Grange labels. Treasury did say that demand exceeds supply globally, a good hint in that the Penfolds brand is still prominent in China, with the company opting to keep 120 staff in the country even after Beijing slapped 175% tariffs on its Australian exports.
Now, this is an interesting one. Australia's big banks have been lifting their credit card interest rates despite rising expectations of official rate cuts by the Reserve Bank later this year.
A new analysis of the big four banks by comparison website mozo.com, mozo.com.au, has found that both low rate and high interest reward cards have gone up since late 2023. Now, in June, Westpac will join the other three majors, Commonwealth Bank, National Australia Bank and ANZ, with a rewards credit card rate of 20.99%. Very high. That's according to a report in the Australian Rate increases across the big banks' cards have climbed between 0.5 percentage points and 1.25 percentage points since September last year. And the banks have also been making their rewards programs less valuable. Part of the challenge for the banks, according to Mozo, is that the buy now, pay later system has made credit cards less desirable. In fact, balances are down $8 billion over the past decade on credit cards. So banks need to recoup lost income on credit cards via higher rates or fees. Credit card interest rates among all lenders range from 7.49%, sounds reasonable, to 27.49%, which isn't reasonable. And the median rate on Mozo's database is 19%.
Uber is facing another court battle starting today, this time with GoCatch, which is a ride-sharing business funded by, among others, James Packer.
Yeah, so Uber effectively put GoCatch out of business in terms of business to consumer rides when it entered the market in 2012. GoCatch is alleging that Uber used underhand methods to damage GoCatch while its operation was illegal. Now, GoCatch is seeking hundreds of millions of dollars in damages. Remember, last month, Uber paid $272 million in damages to the taxi industry after the Victorian Supreme Court found it had been operating illegally in its first 2 years, though there was no admission of liability in that case, so it doesn't necessarily flow onto this one.
All right, now turning to international news, Indonesia will press on with plans to expand nickel output despite a supply glut that is forcing Australian companies to shut down mines.
Indonesia is the world's top producer nowadays. It aims to keep prices low and protect long-term demand for the metal crucial to electric car batteries, according to a report in the Financial Times. The country's production capacity for battery-grade nickel was expected to quadruple to 1 million tonnes by 2030. Capacity for nickel pig iron, which is used to make stainless steel, was projected to expand by up to 15% in the 3 years from the current 1.9 million tonnes. Nickel prices are down about 30% over the past year on the back of this oversupply. Bunch of companies in Australia are thinking about wondering what to do. Wyloo Mines has already shut down its nickel operations. BHP recently came out and said it's considering closing some of its nickel operations. And it just sounds like there's going to be no relief from Indonesia because they're just going to keep producing.
Now, tens of thousands of Israelis gathered outside the Parliament building yesterday in the largest anti-government demonstration since the country went to war in October.
The protesters urged the government to reach a ceasefire deal to free dozens of hostages held by the Hamas militant group in Gaza and to hold early elections, according to Associated Press. Prime Minister Benjamin Netanyahu has vowed to destroy Hamas and bring all the hostages home, yet those goals remain elusive. While Hamas has suffered heavy losses, it remains intact. Israeli society was broadly united immediately after the October 7 attacks when Hamas killed 1,200 people, took about 250 people hostages. Nearly 6 months of conflict have renewed divisions over the leadership of Mr. Netanyahu, though the country remains largely in favour of the war.
And finally, Sean, Sam Bankman-Fried has been sentenced to 25 years in prison over his role in the collapse of his FTX cryptocurrency exchange after a US judge concluded he had done, quote, enormous harm by stealing billions of dollars in customer funds to make risky bets.
The sentence, among the longest ever for a US white-collar defendant, caps the swift and dramatic downfall of a figure who was once one of the most prominent faces in the crypto industry, according to a report in the Financial Times. The 32-year-old, who was found guilty on 7 counts of fraud and money laundering last year, knew his actions were wrong. He knew it was criminal. This is according to Judge Lewis Kaplan from the Manhattan Federal Court. But he showed a, quote, lack of any real remorse. The judge went on to say, and I quote again, he regrets that he made a very bad bet on the likelihood of getting caught, but he's not going to admit a thing, end quote. The judge also concluded that Bankman-Fried had tried to tamper with a witness and lied several times while testifying at trial.
Okay, up next is the Fear and Greed Daily Interview. Martin Merrick, the head of Volvo Group Australia, is your guest.
Yep, all about electric vehicles, but particularly electric trucks and what Volvo is doing in that space.
Yeah, it's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And if you're in holiday mode yesterday and you missed yesterday's interview, definitely check that one out. It was with Jacob Kokanis, who is from Jarden, Australia, and it was a deep dive into Qantas from an investor's perspective, what he likes, what he doesn't like, and what he thinks the outlook is for the airline. It was a really interesting conversation, so go and check that one out. It's in the Fear and Greed playlist as well. Thank you, Sean.
Thank you, Michael.
It is Tuesday, the 2nd of April, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.